You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time to kick things off with the Option Block, your bi-weekly options extravaganza. Oh my, what a week it has been and continues to be here. A lot to unpack. A lot has happened. A lot of living has unfolded since the last time we gathered here together on the old Option Block program. Of course, you guys know where to go to get all this in your ear holes, on demand, just about every platform under the sun. If you listen on demand, we only ask if you like what you hear, keep rating and reviewing, especially a week like this. Probably going to see a lot of people coming in and discovering the world of options and volatility and beating a path to our door, I should say. So help them find their way. Leave a review if you like what you hear. If you don't, send your hate mail to the Rock Lobster. We know he likes it. And of course, if you want to turn up your game to 11, theoptionsinsider.com/secret club. Remember, just me and you talking here. Don't tell anybody else. Of course, you join there. You have all the fun throughout the week. Oddities tomorrow. Pro Q&A. We had once in future and now present. Dr. Vix answering all your vol questions. And let's face it, who didn't have a question or two about vol this week? A good one to check out. Of course, if you join now, you get access to all those ones you already did, plus all the upcoming ones and a whole bunch of other fun. Of course, however you listen live after the fact, keep sending in those questions, those comments. You're seeing things out there in the market. You're like, what the heck is that? Hit us up. Let us know. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from on the old show today. First, I am very pleased to say we are not dialing the handle all the way out to the mid-Atlantic there. Instead, we're dialing it right back out to about close to an hour or so outside of Chicago proper, to that quiet, that sleepy, that tranquil hamlet known as St. Charles, Illinois. We are joined once again back in the good old U.S. of A. by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, and indeed, welcome back to the shores of these fine United States, sir.
It's great to be here, and so I guess you learn your lesson whenever you leave the city limits of St. Charles. Sometimes bad things can happen.
Yes. Moral of the story, never, ever leave St. Charles. They put a weather shield around it for a reason, sir, to keep the weather out, but also to keep you in. And apparently you didn't get the memo, sir. You leave, you go to, shall we say, some more developing parts of the globe. Things can happen that are always fun and exciting. And you know what's always fun and exciting, and probably also a bit of a developing part of the globe? It's the shore of Maine. We are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of a variety of newsletters and other things that you folks can subscribe to at your leisure. Mr. Rock Lobster, welcome back to the program. Unfortunately, I'm sad to say you cannot look out your window today to a little bit southeast and wave to Uncle Mike anymore, sir.
Yes, I know that it was a thrill for the week that it happened, but sadly it is gone, and I have to look due west to the shores to the shores of St. Charles to see Mr. TOSAW happily ensconced back at home.
And we don't have to look far to see what the hell is going on with this market. Let's all find out together. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's do it. Let's dig into it. Man, there's some stuff popping off this week. You know, the last time we gathered here together, listeners, on Monday on our show, it seemed like everything was about to really fall out of bed. You know, the S&P, or I should say the NASDAQ, was off over 4%. The S&P was off well over 2%. Dow, similar territory. Seemed like dire things were afoot. Of course, as the show progressed, it seemed like maybe the worst was over. We were starting to bounce off the lows a little bit. I don't think any of us, I won't put words in these two's mouths, but I don't think any of us thought we would see a complete retracement of the day, yet that's pretty much what we saw. Nigh on unprecedented in the rally we saw out there, intraday swing. We saw it play out again the next session, not quite to the same degree. It was around 2+% we saw in most of the major indices, most of that getting reversed. And now coming into today's session, we're playing the flip side of that game. It's like if the bears came out and said, yeah, you're going to erase our sell-offs, are you? Well, we're going to erase your rally today, because we had some good numbers this morning. Economy growing at the end of last year, you know, faster clip than we've seen since the early 80s. Jobless claims actually looking pretty good. And yet that was enough to boost us for a while there this morning. And yet, as we are seeing, this is the week of reversals. Turnabout is fair play, because we are seeing the markets turning about yet again. Another reason why you can't really prepare for the show too far in advance, listeners, because everything we wrote up earlier, not that long ago, about an hour ago, is all out the window. The markets are now firmly back into the red, except for the Dow. The Dow is fighting the trend, up about 0.1%. S&P now off about 0.25%. NASDAQ off about 0.75%. Vol popping all over the place. It was eroding. VIX, as we started looking at it, was exactly at a 30, now up to about a 32. When we kicked off the show, that's down a little over 6, about 6.3 points from where it was on Monday's show. Just give you a sense, we're at a 32, and it's still off 6 points from where we were on Monday's show. Just give you a sense of where we were on Monday. VVIX 140, down a whopping 25 points from Monday's show, but give it a few minutes if this continues, we could get back up there again. We got VXX, was at about a 22 and change, or 23 and change actually, now 2460, back only down 2 points now, about 2.05 points from where it was on Monday. Same deal for UVXY, was in a 1775 or so, now up to about an 1875 when we kicked off the show. That's down about 2.3 points from Monday's show. And VolQ was holding out at about a 32.25 when we kicked off the show. That's down 6, almost 7 points from where it was on Monday's show. So yeah, it's back in it, listeners. It's turnabout is fair play week out here. Let's go out to the uncle list of Mike's first, because A, he's back in these beloved here United States, and B, we're in markets that seem like the same day. It seemed like an Uncle Mike market, then it's not. We've been doing that a lot. So let's start, Uncle Mike. The last time we chatted, as I mentioned, was on Monday's show, and it seemed at the time, I should say, things were pretty dire, even though maybe the worm was starting to turn at that point. I don't think any of us expected the degree of retracement that we saw. So let's start there. Walk us through, after that show, as you were watching the markets fight and claw all their way back to pretty much unched on the day, what your thoughts were on that when we saw the second dose of that play out on Tuesday, and now today as we're seeing a retracement in the other direction, sir. A lot to unpack there.
No doubt about that. So I think I was reading the statistics on it. I think this is just like the third or fourth time in history that the market has ended the day positive on the day after a 4% decline. So that's really something you don't see that often. Monday was a special day from that standpoint, and it was definitely fun to watch. I think that a lot of the rally of the day started when we started the option block. So they just must have heard Mark Longo talking, and then they're like, well, if the sexiest man in options is still on, then I know that I need to buy this market.
Exactly. I'm known for talking up a market or two. Not only am I sexiest man in options, I'm also now the lord of options. My certificate just came in the mail a few days ago, so it's all official now. So they must have heard that, and they must have boosted the market.
It must have been. So we have that going on. And then, of course, Tuesday, we have another really wide range of a day. Wednesday, the same thing holds true. It's like we gap up, then we go down, and then we come back flat on the day. And then so far, not flat, but just not a lot of overall end point to it, or not a lot of movement from start to finish, just a lot in the middle. And then today, I'm just looking at this, and we've had roughly 100-point range in the S&P 500 today. So there's definitely a lot going on throughout the day with everything. And it's hard to believe that we're down 18 right now in the S&P, and we were roughly 100 points higher than where we were on the day. So the main thing that you just have to do in markets like this is just stick with your rules. And I tweeted about this earlier in the week. I don't care how great your market timing indicators are, your fundamentals are, whatever the case may be, you need to have a plan for risk management. And if your risk management is that you're going to buy and hold something, that's fine, but make sure that that was your plan going into it. If your plan was to risk 3% of your capital or 10% or 5% or whatever, make sure you stick to that. There's an old saying, the market can remain irrational longer than you can remain solvent. I think that days like we've had this week, quite frankly, I think they're irrational. Why is the market moving this much? Whether you're a bull or a bear, this is a lot of buying and selling. It's irrational. If you're caught on the wrong side of being irrational, things are going to be very painful for you. Now, with that being said, we have positions at RCM that we're still holding on to that we like for the long haul, that we're fine riding out this volatility with. But there's also things with which we've made adjustments on. I made an adjustment on Monday of rolling down my put spread, and I talked about it on the strategy block. And I think that if you have a plan for times like this, then you can get through it and you'll be fine if your plan is coherent to what the market is giving you. If you're just trying to say, oh, well, how am I going to do to adjust this? And then you just try to react to everything without a predetermined plan, I think you're asking for trouble. Now, with what's happening in the markets themselves, we had the Fed talking yesterday about how it sounds like they're going to do a rate increase in March. And I don't think that's really a shocking thing. Right now, the debate is that if we have too much inflation, then for the people that don't make a lot of money, that's really going to hurt them. And it'll hurt them because of the fact that if they don't get a raise at work and all of a sudden it costs more to buy soap, food, clothes, whatever, that's really going to hurt them, and that's going to hurt our economy. Now, the other side to it with inflation is people that already have enough money to buy those things, their wages would go up, their stock markets would go up with inflation. It could be viewed as a good thing for people who position themselves to make inflation work in their favor. And that seems to be the debate over whether or not we should try and raise interest rates to help stop this inflation. Now, what's the right thing to do? Well, I'll leave that up to the Fed and all the other experts to say what the right thing to do is for our overall economy. What my job to do is determine what's the best path as a market participant. And right now, what I'm doing is I've rolled down my put spreads for the things that are hedged. I still have the hedges in place. And so we're in good shape on a lot of those things. And then with the other things with which I'm invested, my shorts are all still out of the money. But I have my eye on them for my short premium. And for my longs, the things that I'm buying and holding, I'm continuing to hold. And the things that I'm need to get into or get out of, I'm doing what I'm doing. So my advice of what to do with a market like this, and I don't care if it's because of the Russians, I don't care if it's because of the Fed, whatever the case may be, stick to your plan. It is hard to do in times like this. I'm going to end my segment here by quoting Mike Tyson talking about plans. Everybody has a plan until they get punched in the face. How are you going to plan for it when you get punched in the face? That's what I'd like to ask everybody, and carry out your plans.
So, Uncle Mike, everyone wants to know what the Perma Bull is up to in this environment. Staying with the plan, rolling down your put spreads we've known from your Legion of strategy blocks you've done here on the show for the better part of the past decade now. You don't let your short put spreads get in the money, so we know you're pretty diligent on your role. It sounds like you're keeping most other things in place, not making a lot of, shall we say, sizable changes. Are you starting to get those calls, though? I mean, these are the times when the client's probably maybe getting a little spooked. You're starting to field some of those calls, Uncle Mike?
The only one that I actually had is that I had a client that had some money they were going to deploy into some market exposure. And on Monday, they just sent me an email saying, you know what, let's just hold off for a bit. But for the people that are already in, I don't think I've gotten any calls. I've gotten zero, actually, calls of concern from the market. The only ones that I've had is I've had one person that I talked to the other day saying that he wanted to wait to deploy some capital until we had more of a pullback. And that wasn't because of the pullback we're having right now. It's just because the markets are still within roughly 12% of an all-time high. He was more concerned with the market being higher. And then I had another client that we were planning on putting a pretty significant percentage of money to work on Monday from cash. And she just called me and said, you know what, I'd like to wait a little bit. But aside from that, I've had zero phone calls. Plan the trade, trade the plan.
Interesting. Staying in, not moving to cash or into clients, anything like that. You might expect a little bit of that, right? Given this environment, but it doesn't sound like Uncle Mike's clients sleep well at night, listeners. Maybe that's why you want to hit him up over there in the land of St. Charles. At the very least, check out his YouTube or perhaps his Twitter posts out there. Let's go on out. You don't want to check out his Twitter. He's just a Twitter troll when he's not talking to us. We had the once in future, now present Dr. Vic say he's trolling him on Twitter. He is, of course, the rockingest of lobsters. First off, Mr. Rock Lobster, why are you picking a fight with Dr. Vix on Twitter, sir?
I'm trying to figure out what the last troll was. I mean, I made fun of him because he's calling himself doctor now, like like the first lady. But I can't say that because then everybody gets all upset about that.
He's definitely one of those where if you call him Mr. Rhodes, he will correct you and say, no, doctor.
So,
he's one of those guys.
Yeah. So I think I believe that was the last spat, but I'd have to look on for his the amount of time I spend on Twitter. You know what? I guess now that he's very touchy now. Maybe he's very touchy.
He is a very delicate fellow. Yes, you will discover that. We will discover that.
Now that he has those lofty titles foisted upon him.
He was complaining about you the entire time he was in the hot seat this week. So clearly you have touched a nerve. But once in future and present Dr. Vix aside, Mr. Rock Lobster, same question for you. What have you and your superhero alter ego / sidekick Ballman, what's been going through the old noggin last time we talked? We were in the depths of one of the more aggressive sell-offs we've seen in quite some time. And then it almost immediately turned around after we finished the show. As Uncle Mike said, we kind of talked it up. And then we saw a similar story, not quite to the same degree, play out on Tuesday. And now today we're seeing the opposite of that story play out, sir. What has been catching the eye of the Ballman, sir?
Yeah, we opened up, 10 points? Good, solid 100 points.
Yeah, it was a nice pop, yeah.
Yep. And then I think the sadness came, and there's a couple things like, the Intel earnings, they got so earnings are disappointed people. The outlook disappointed people. I don't think it was the earnings so much as the outlook. Even Tesla was a little grumpy. Now that stock is off. So 1250 was the high in Tesla, and now it's trading 850. So again, they took off a nice healthy 30% from the top. You look at a lot of the big tech names, except maybe for Apple, hasn't suffered as bad. But certainly a lot of the high multiple tech stocks have gotten a good chop. So we might be in that area that you probably remember from the 90s and the 2000s, or multiple compression, right? Where everything was like multiple expansion. People were paying up for earnings. And now, as folks take a look, they're like, maybe we're not going to pay up so much for the earnings this time. So the idea is, if all of a sudden people don't want to pay up for the growth anymore, they're looking at supply chain stuff and all these other issues that are kind of causing they're pulling back. So my guess would be is so some dollars would find stocks that are not, not having the same issues, right? But I mean, I think they're today is it looks anyway right now. Like I think today feels like it'll be quite a red day. We'll probably touch the lows that we touched on Monday is my guess. Just the way that Volman is looking at VIX and he's like, you know what? Vol should have been going down. My guess on Vol for the week, the range was going to be, we're going to either touch 20 or 40 in a week after the Fed. So the guy Fed talks yesterday and today, I guess we traded as low as 28 and now we're trading 32.72 and just climbing slowly but surely. So I guess it's not going to surprise me if we're 40 by the end of today, if this keeps up, because I think the market's just slowly grinding into a sell-off. So you look at that and you go, okay, well, this is not super great. If you're a bull, it's not a very good day to be a bull. But that's what we got. I think we've got what we do have is we have multiple compression. A lot of these stocks have been taken to the woodshed, and that's what we've got for a while. I don't think there's, until people are happy again. Usually when the Fed starts to kind of clamp down and stop basically giving money away, it's harder on technology stocks. And this time is no different. I think we defied gravity for a while, but I think most of the highs were put in November. And then the Fed got serious and they actually started with the taper in earnest, and they're going to be done buying bonds totally in March. That was pretty, I felt that was pretty definite, to be honest, coming from them. Like, okay, we'll be done now. We're not buying anything else. So, and now door number 2 is raising rates. So they're serious. At least they're saying they're serious about inflation, which is going to be not great for stocks in the short term. So I look at what's going on and how things are trading, and that's what we got. But I still think like vol could kind of keep going higher, because if this, like with the multiple expansion part, or like multiples are starting to contract again, and there's no really kind of end game for that, right? The Fed's pretty much going to do what they say, although maybe they might not be as aggressive as with rates if the market's down, like 20% this year. So it's kind of heading that way, right? We were at 4,800, we're at 4,300. SPX gets back to 4,000, in a month. They probably won't have to be as aggressive with rates. But I think that's what we have. So like, when it's a big boat, it's like a super tanker, but when it turns around and starts going the other way, that's kind of what's going to happen. So I think that's what we have in the short term. And at least from a vol man point of view, yeah, we could definitely see a higher vol if the market really starts to sell off in real time. And which is kind of what it's doing today. We're only down 1% from the open, but we're down over 2% from the highs of the day. So still, it's still a very volatile intraday market, and like this is almost 5 days in a row of it, to be honest. So, and that's why VIX is where it is.
Yeah, you can't argue that VIX is too low with these markets we got right now, shooting all over the place. If you don't like where we are in these markets right now, listeners, just literally wait about 30 seconds because chances are we will be somewhere else. And a lot to unpack. Yeah, you're talking about the Fed. I don't want to go down the Fed rabbit hole again because we've done that a few times already. Hearing Powell say like, yeah, maybe the economy doesn't need any more easing right now. Maybe we should switch to inflation control. It's like, yeah, maybe you could have got on that train, I don't know, 6 months ago, a year ago, when everyone else was getting on that train. I would love to pull aside a guy like Greenspan right now, just off the record, just chat with him. Because the guy who lived as an inflation hawk obviously can't get Volcker anymore, but a guy like Greenspan, and just get him off the record to say, what do you really think about what's going on? Because he must just be livid. He spent, the entirety of his time as Fed chairman trying to rein in inflation. He even tried to derail, the greatest bubble. Remember the irrational exuberance? He tried to derail that to avoid inflation. The people hated him for that. And now here we are in just this era of epic on inflation. It must just burn his soul at the very least. But intriguing stuff. We won't go down Fed. If you want to talk more about rates and the Fed, we'll probably get a little bit more of that coming up in about an hour. Coming up on TWIFO with Todd Colvin there. He's a big rates guy. So we'll be talking a lot about a good week to have him on, given everything that's going on out there. So stay tuned for all that fun. I see you guys talking about nat gas and things in the chat. Yeah, it's interesting. If you listen, Dan and I thought it was a little weird that it was getting beat up last week. So if you listen to that show on TWIFO, you maybe took some action against it. You're probably looking all right now. I feel you on that NASDAQ put spread there, Mr. Unlimited. You'll get there. It's one day put spread sometimes. Sometimes it's the old saying of, picking up nickels in front of the steamroller. We used to say that on the floor. Sometimes you got to get out of the way of the steamroller. But hey, good thing about these markets, we might be there by the end of the day. You never know where we're going to be. Let's see where we are right now from an overall volume perspective. And right now, if I fired this up, well, SPY would give me an indication. But outside of SPY and maybe a little bit of small caps, I wouldn't think there was much up with this market. VIX, only 234,000 contracts on the tape as of a few minutes ago. Of course, that was still when VIX was mostly in the green, or she's still in the green, but markets was mostly in the green. Yeah, it's only 239 right now, so it hasn't really done a lot. The ADV, though, since the last time we chatted, listen, remember I said on Monday this thing's going to start turning the ADV. It's back up to almost 600K, 580,000. It's up 115,000 since Monday's show. So that's a big pop. We obviously were already, by this time on Monday's show, listeners, I think we're at about 1.4 million already. So you're talking, about 1.2 million contracts behind Monday's pace. Now, of course, Monday was an epic day. We're not quite there, but still, that shows you how comparatively light things are right now. SPY, though, doing some numbers, 4.12 million on the tape for SPY. The ADV also ticking up out there to 6.1 million. The S, again, also not even at a million right now. It's at 878 right now. The ADV about 1.7 million. So that has ticked up since Monday. And small cap looking robust out there right now. 687,000. Let's see where good old IWM is hanging out right now. Off 2.2% right now. The ADV has ticked up again back to 874. So it's going to start threatening a million again out there soon. We'll get more into small caps later on TWIFO there as well. Got a feeling there's some action to be found out there. What is your preferred flavor of small caps? Your IWM? You're going to go more into the rut, the direct flavor? Hit us up. Let us know. Let's also look here. I mean, if you looked at this top 10, you might think it was a little weird, but nothing crazy. It only cost you $279,000 to break into the top 10 right now. That gets you to NEO. So NEO back there hanging out in the top 10. Number 9, Netflix. Haven't seen them around in a little bit, but of course, post earnings, they've been on a little bit of a tear in the wrong direction for a lot of the bulls out there. Let's see where Netflix is right now. Netflix actually bucking the trend, popping today, up 6.5%, 383. Let's see, how low did we get here? Let's see. They were, of course, going into their earnings. They were at 508, so they're off quite a bit. They went from 508 to 397 in the span of a session, listeners. So that's a pretty rough hit. They got down. It looks like the low was 359. That was yesterday, and then now they're coming out of it a little bit tight. Now 384 right now, but still well off 100 points off their high just from a couple of weeks ago out there. And, of course, you go back about a month, they were 613, so they're off several hundred handles from that level. But Netflix, number 9 right now, 288,000. So you got to go all the way up to number 8 before we even break 300K. Again, not a sign that the market is imploding or anything. That gets you to Lucid, 355,000 contracts. Number 7, it's Ford. They're selling off a little bit out there today, about 19.5, off about 40 cents. This one's been a fun one to watch of late. It's kind of got a lot of meme trends to it. Folks are buying it. Folks are selling it. What are you guys up to in Ford? Are you getting on the calls, the call verticals? We may be selling some puts. When this thing broke through the 20 handle, got down to, I think, around 18.5 or so recently. What was the low out there? 1898 on Monday. So, yeah, it got down to about an 18 handle ever so briefly. You folks selling puts, what are you up to out there in Ford? Number 6, good old Softy. Been making some headlines of late, kind of a quiet week for them from a headline perspective, and they haven't bought anybody for $70 billion this week. But they are bucking the trend up about 1%, flirting with the 300 level. They broke through it a couple of times today. They got up to almost 307 today. So they've had quite the range today, at the bottom end of their range right now. So back below 300. So yeah, quite the topsy-turvy day for Microsoft. Number 5, Intel, my old stomping grounds out there. Talking about going to build a $100 billion mega fab in the U.S. That's a lot of outlay, but hey, they're feeling it right now, off 7.3%, back down below 48 right now. My my sense, my bellwether for Intel, whether this is cheap or high, that's gone. I used to have it down to a science when I was out there trading out there. Oh, this is the range where it hangs out. This is a little bit inflated. This is low. I haven't watched Intel day to day in quite some time. So 48, a little bit shy of that. What do you think, listeners? High, low, hit us up, let us know. Number 4, it's pretty much always at number 4, very close to it. It's NVIDIA. If it's not NVIDIA, it's AMD hanging out at the number 4 spot. Today it's NVIDIA, 505,000. Number 3, the aforementioned AMD at 513,000. Don't see the its symbol twin out here today. No AMC in the top 10. Number 2, yes, I said number 2. It's Apple at 988,000 right now. If you want to listen to a bit of a bearish play, Apple, of course, popping off later today, I believe. Brian had an interesting one on OPR, a little bit of a bearish put spread play going into Apple earnings. So if you're intrigued, want some idea generation out there in Apple, check out Brian's show out there. Apple, another one, had an interesting range at about 159, a little bit shy of it right now, off about 0.5%. Earlier today, got up to about 163.5, so it's off 4.5 handles from its high today. So Apple starting to turn a little bit as well. Let's see, back on the month, a month ago it was trading 180, so Apple giving up some of that near-term upside juice out there, but still surviving a lot better than some of these other names out there. That means number 1 is Tesla, listeners. Once again, Tesla kicking Apple to the curb, saying, give me that spot, off a whopping 82 handles or 8.75% at about 855 and change right now. Of course, everyone was watching. It broke off the 1,000 level pretty aggressively. Last week, actually, when the sell-off started is when it kind of first broke through the 1,000 level on Friday. Got down to about 864 on Monday and kind of bounced off it a couple of times. 861 actually was the low. Then it rallied all the way back up yesterday to 970. And, of course, coming into today, they had numbers that seem kind of decent. You know, they're pretty productive from a car manufacturing perspective, but they also are suffering from the same supply shortages that everyone is out there, and that seems to really be hitting them out there, off 140 handles in the past 5 days. But good enough for the number 1 spot right now. 1.27 million contracts on the tape out there. Earnings, like I said, flying fast and furious this week. We had Tesla last night, Boeing yesterday, AT&T, NASDAQ, Abbott Labs, and my old stomping grounds of Intel. Today we have MasterCard, Mickey D's, JetBlue, Dow, Southwest, Apple, Robinhood, and Visa. Well, let's see how Hood's hanging up. Let's see if the Rock Lobster's prediction that it's going to be a single-digit 1161, looking better, Mr. Rock Lobster, off 6.5% just today. You agree with his supposition Hood's going to be a single-digit stock pretty soon? We're not that far away from it right now, listeners. If you want to hear more about that, of course, tune in to Options Oddities every Friday out there. Hood's been a frequent offender of late. We're still waiting for the updated earnings move results and earnings season reports from our friends over there at Orats. They're a little busy, obviously, so they usually have them in our hot little hands right before showtime. They'll be up a little bit later today. You can go check those out for yourselves. If you haven't done so, listeners, I encourage you to check out as well the earnings trades reports, because we've been waiting for a while for some new trades to pop off, and we saw some popping off earlier this week. Matt and his team identifying, looks like 1, 2, 3, 4, 5, 6, 7 individual trades, I should say, that kind of caught their eye that were interesting. Got a calendar here in IBM, a calendar in Logitech, a calendar in Pets and Verizon, and a few others out here. So they list the strikes, they list the entry point, where the stock was, what the vol is, and they're going to track and see how it performs. So far, he's long some straddles out here, which is kind of interesting. In the past, actually selling calendars, which is not a trade we see very often. You're talking selling the nearer date or the longer dated contract and buying the near. That's something a lot of people hard to wrap their heads around that one. But that was the more profitable trade last time. Again, this report is not that old. They only started doing this about a month and change ago. So, but interesting stuff. Some long straddles. Check them out. See what you think on those, listeners. We do have some earnings coming up, of course, later today. We had JetBlue before the bell. We had Love, so Southwest, and Mickey D's before the bell as well. Apple after the bell, 162.5 is where they were as of this report. They were obviously a little bit off of that now. The straddle was 8.25. In the past, they've moved 570. So yeah, they're pricing in some juice. Hood today, $13 is where they were as of this report. So obviously they're a little bit shy of that now, $11.60. They're pricing in $2.10. In the past, they moved to $1.34. Given how much we've seen the stock get annihilated, kind of hard to say more vol isn't warranted out there. Caterpillar tomorrow before the bell. 214 is where the stock was as of this report. 955 is what they were pricing in. The past they moved $6.50, so $3 worth of extra juice, close to 50%. Wow, that's a lot of extra juice in Caterpillar. A bunch of names for you folks to sink your teeth into out there, listeners. Of course, we'll have newly updated earnings move results, earnings season, and earnings trade reports hitting the site a little bit later today. Stay tuned for those. Meanwhile, it's time for us to stay tuned for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's dive into this madness, see what our Eye of Sauron found out here for us today. First, we're going out to Siri. No, not your digital assistant on your Apple device. No, this is Sirius XM, ticker symbol Siri, SIRI. Trading right now, $6.14, up about 2.5% today. So bucking the trend. Let's see, on the year. A year ago, it was trading $6.87, so they're down about 11% on the year. They sold off pretty hard. So when all the meme stuff was happening, Sirius XM actually got hit, looks like, because they came off down to about March 3rd. They hit, looks like 579, and they rallied again by June 8th. Hey, our favorite day, once again, popping up. 660 a hit there, and that was pretty much, actually got up to, like 814 intraday. So that was the high for the year. Never really got back to there. And it's pretty much been selling off ever since to where we find it right now, right around $6 and change out there. So about 30 cents off the low for the year. What did our Eye of Sauron found? A pretty decent chunk, 21,096, an odd number, but an interesting one, of the Feb expiring on the 4th. So these are the weeklies going out next week. 6 puts for 20 cents. Looks like they were the dime at 20. So looks like they actually gobbled these bad boys up. They paid a 76 vol for these. That's hefty. So interesting stuff. Where was the stock? The stock was 618, so almost right here when they did these. So this is an earnings play. That makes more sense now. The earnings are on February 1st. So that makes a heck of a lot more sense why you'd want to come and gobble up 21,000 of something and lift the offer with only a week to go. This is kind of the use case, dare I say it, that weeklies were designed for, buying something to hedge against an earnings announcement. Sounds like, Mr. Rock Lobster, someone's a little spooked about the upcoming Sirius XM earnings, and they're willing to spend 20 cents 21,000 times to do something about it.
So you see that as a not a line in the sand trade, but more of a freak out type trade.
It seems like it. It seems like it.
It feels like Sirius XM has been a $6 stock for like 20 years. Am I off when I say that?
I had the same feeling. I was like, really? You're going to get spooked? This listing hasn't done much.
I'm trying to think of a time when that stock ever actually went up, and I can't. And it's not coming to me.
June 8th, it hit $8.14. That's about it.
I'm looking at the long time performance. Oh, okay, yeah. So for a long time, it was a $1 stock, and then it was a $3 stock, and now it's been right around $5 since 2018. So I guess somebody wants to lock in their gains. You can't fault them. You can't fault them for that. You can't fault them at all. So I look at this and I'm like, but 20 cents for a $6 put. I don't think it's not an unreasonable trade for earnings. The price is right. And maybe they might get some action out of it, I mean, it's how much time do they have to expiration on this one? They've got, it's Feb 4th.
Yeah,
cycle.
A little over a week.
Yeah, they got a little over a week. I mean, I don't think it's an irrational put purchase, by any stretch. But clearly they had no trouble finding somebody to take the other side too. So, maybe Siri reports something. I know what is it?
Their earnings are on the 1st, so this is the earnings.
So
play.
No, Neil Young was Spotify.
That's Spotify. Yeah. Don't drag us into the Neil Young Joe Rogan debate, sir. We don't need to go there.
I guess Siri does something similar, right? They put a lot of podcasts out.
They do put a lot of podcasts on Spotify. Oh, Sirius, not so much Sirius, but Spotify does.
Spotify does a lot of podcasts. I'm just looking at market caps, right? So Siri is about a $23 billion market cap in everybody's car with the radios, and Spotify is a $33 billion market cap. So again, those they're roughly about the same value on those. I haven't quite figured out. It's hard for me to value Spotify, even though I think it's a kind of a cool property. But I think Siri, it's again a reasonable put purchase given the conditions and the price of the puts. So reasonable, but I mean, it doesn't really, it has a hard time going below $5.75. I think, it pays a little dividend, it makes a little money. It's kind of, it's like, what is it? It's like a radio utility. It's just, for people that want that kind of investment, I think that's what it is. It's like a radio utility, and they add new talent, and so. Reasonable put price. I don't know what they're getting out of it. Maybe it's possible they're buying those puts with stock and looking for some upside as more people reached for their Sirius satellite radio. That's possible.
That is possible. We shall see on the 1st. That's the earnings day. By the way, I take it back. Sirius does offer a selected and curated offering of podcasts out there for subscribers. We'll have to get some of our stuff on there. We'll see. Maybe we'll make a best of for them out there. But it looks like they have all kinds of weird stuff, mostly with major media outlets out there, trying to play catch up in the podcast game. They're a little bit late there. Let's go on out to a newcomer to the odd block here. This is PRVB. This is Provention Bio Inc., obviously a biotech listeners. Trading right now about $3.50. It's had a rough year. It's off 1030 or 75% on the year. A year ago, it was trading $13.78. Got as high as about $16 in all the madness of meme February of this year, and ever since then it's been pretty much straight down. Actually, it sold off to about $6 on July 7th, and then it was hovering there in the $6 to $7 range for the latter half of the year until December. Then all of a sudden, looks like mid-December, it started trending down again, and it broke $6 about the 15th of December, and has sold off pretty hard since then, down to $3.50 right now. I'm not sure what they make at Provention, but it's not getting a lot of love out there right now. And looks like, though, Mr. Rock Lobster, I like this trade. This just brings a smile to my face. Someone said, you know what? Maybe I can't sell this thing, or maybe I'm just not willing to right now. But I'm going to go out and just harvest a whole bunch of yield and just park this thing for the next couple of years. Because someone came out and sold the Jan 2024, so 2 years out, 10 calls. So roughly 3x where the stock is trading right now. I like their optimism. They haven't been there since the meme days of February. And they sold 4,000 of them on the bid for 75 cents. By the way, this gets an award for crappy market as well. 75 cents at $1.80 on these things. They crushed the bid 4,000 times. It's about a 60 vol. And they said, of course, there's earnings coming up between now and Jan of 2024. The next one is in February 24th. And they just decided, I'm going to park this. And, if the stock sits here, that's a 21.5% return over 2 years, Mr. Rock Lobster. That's a pretty hefty amount of juice. You can love these biotechs. They still give you juice on a 3x call 2 years out, sir.
The nature of the biotech, right? It's clear. Like even on the 10 strike, somebody will sell 4,000 calls. So that's a pretty good return for a call sale out there. I mean,
I don't hate this one at all. Yeah,
but you don't have a lot of problems if they take you out at 10 Jan 2024. So what is that? What does that yield? So that would be, it's an easily almost a triple for your stock if you buy the stock here and sell the call. So, that's anybody would be happy with that. At least I am whenever that happens. I don't know about this new generation of apes that buy an NFT and then sell it for $5 million. I still haven't figured out who the people are that buy this stuff. But anyway, it does shock me. So again, a wide market. This is just buy right for yield. I don't think there's anything However, this stock does have a history of trying to, I guess, getting a product out. So it's been a while since they've gotten hot and heavy on selling a product. And with most stocks at the beginning of 2022, if it is a company that doesn't have solid earnings, I just look at every chart, man. They don't look very good. So anything that's a maybe is getting sold, I would say right now. So this is definitely a maybe in some portfolios, and it is getting sold.
A definite maybe, and someone sold 2 years worth of upside in this name and got, if it sits there, 21.5%. If not, this thing goes to zero. They still got 75 cents out of the deal. Again, I'm not usually a fan of long-term trades like this, but this one kind of brings a smile to my face for some reason. They got so much juice for this thing, and if it gets up there, they're still dumping their stock at nearly 3x on top of it. So again, I don't hate this one. That's we got more to review here, including our D local. I think we'll save those, though, because kind of coming up against it. I want to get some of you folks on. It is Mail Block Thursday, after all, so let's do it. Let's dive into the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's get into it, listeners. Let's pay off some of our questions of the week. I had a feeling some of them might hit early, and they did. We had our question from our last show on Monday. At the time, VIX was 37.81, and we asked you if we thought this had some legs or if this is kind of just a bit of a blip. Will we hit 40 or 30 first this week? Obviously, we know our answer. We broke the 30 handle there yesterday. Got down, looks like a low of about 27.69 or so on the day. So the answer was 30. Of course, when we stopped that poll, right when we broke 30, the people were leaning the other way. People were leaning 40 first. 37.9%. I love how they do these polls. They don't add up to 100%. 37.9% said 40, and then 31% each tied with saying 30 first, and also we might just close between 30 and 40, which if this holds up, that latter answer will also be true, but no. We broke the 30 handle, if ever so briefly, back north of it again. Still north of 32 right now, listeners, as we're doing the show. We also asked you, this one's still live out there. In fact, we could probably retweet it here during the show. But we asked you, hey, a lot of blood on the screen out there in crypto. Uncle Mike talking all these crypto down. Blame him. Don't blame me. We said, has this sell-off in Bitcoin, ETH, and other leading crypto assets, has that changed your outlook on the crypto market for this year? So far, yes, only 17.4%. No, whopping 52.2%. So we got some hodlers out there. And then 30.4% of you saying, I don't trade crypto yet. I haven't gotten into those waters yet. So, yeah, a lot of you still feeling the hodl out there in crypto land. Last week, you guys were feeling the long straddles as well, which I got to say, that's pretty prescient for this week. Long straddles working out pretty good right now. We asked, inspired by Brian and all of his straddle love over there on OPR, we said, hey, long straddles are pretty popular last year and decently profitable as well in 2021. You think that trend will continue in 2022? And 47% of you said yes, 35% of you said no, and about 18% said you prefer to sell them. Short straddles out there. So interesting. If you're not playing along with our polls, it's fun stuff. It gets us to have a sense of what you guys are into, what you think on various topics. And it's a fun way to engage with the shows when you're not listening. Or even though they have enough content listeners, you could be listening pretty much all the time. Let's go out here. Mr. Uncle Mike, Ethan has a suggestion for you. He says, with the Fed beginning their rate hikes, it seems like it might be time for Mike's Row webinar. Uncle Mike, here you go. It's your chance. You've been waiting how many years to do your Row webinar? Ethan suggests maybe now is the time, sir. What say you?
You know what? If I get more demand, I actually would do a special Row webinar if I got enough demand. So I'll tell you this, if I get another 100 likes on Twitter, 100 followers on Twitter, and I get, I'll say another 100 followers on Twitter within the next month, I will do a Row webinar.
You can put a poll out too. We'll retweet it for you. Say, hey, should I do a Row webinar? Yes or no? And then we'll see what people say. And you can easily get 100 votes on that if we retweet it for you. And then it'll be a fun thing too. So we'll do both. We'll get you to follow Uncle Mike and then put out a poll, Uncle Mike, and we'll retweet it for you out there. It'd be kind of fun. So should Uncle Mike, do you agree with Ethan? Is it time to talk Row, the forgotten, dare I say it, the redheaded stepchild of the Greeks? hit up Uncle Mike. Let him know. Give him a follow at Mike TOSAW, TOSAW, all one word over there on Twitter. Don't follow the Rock Lobster, though. He's a bit of a troll. All right. Let's go to this one from PNL Man. Let's see. Oh, he's lurking in the chat. Hopefully his shoulder is doing better. He says, this sounds like a good question for one of your shows. What determines which stocks have weeklies? Well, it is a good question, actually, because, it's not one we discuss a lot, but, it's primarily chosen. The exchanges go out there and they look at the volume numbers and liquidity numbers for certain names. And if the name is pretty hot, there's a lot of demand going up, there's a lot of volume going up for a particular name, then yeah, they're going to add weeklies. Look at, Andrew and I are always joking about EDU, that crappy name, but we're trading back and forth all the time on Options Oddity. At least I am. He's out of it now. And they added weeklies on that one towards the end of last year because it was doing so much paper. All of a sudden, we were seeing 30,000 lots going up with the calls and stuff. So that's typically the barometer that they have. They see a decent amount of paper. That said, it never hurts you to ask. Usually it involves adding strikes. We've had some success. In fact, we've had listeners write into our Options Bootcamp show, say, hey, I took your advice. I contacted the SIBO to ask if they would list options on a particular name or add strikes, and they've had success. They actually get back to them, and they will do it. So if you think a name maybe merits weeklies, go to the market services email like the SIBO. It's pretty readily available on the website. And say, hey, I'm trading this. I wouldn't mind seeing a weekly in it. The worst they could say is no, right? So I don't think there's any hard and fast metric that they use. I think if they just see a lot of volume coming in, and maybe at OCC, maybe there is some sort of barometer for having a weekly, but usually it's got to have a decent amount of volume. But again, if you want to see weeklies in anything, it doesn't hurt to ask. Mr. Rock Lobster, anything to add on what determines which stocks have weeklies, sir?
Just volume and perceived interest. Once I think a stock starts, like there's a stock that used to be hot. Remember FireEye? It was a trader.
It was hot for like a week or two, like Snowflake.
Yeah. and it had weeklies. And then it got kind of cold and sad, and they changed their name to Mandiant, and now they don't have weeklies anymore because there's not enough volume. So there's probably, I would say, you need some volume in the name to generate the interest in the weeklies. Because the SIBO, and I don't blame them. Like if it's not going to really trade, there's no point in wasting the quote traffic on it. So I think needs to have some action, needs to have some volume. And I'm sure there's probably some minimum volume requirement.
Yeah, it might be worth hitting up OCC and see if there is, is there a minimum threshold you have to exceed? That probably is buried somewhere. We were just looking at dividend stuff for our bootcamp show, and we discovered it has to be a $12.50 hit per contract in order for them to adjust. So they have made changes recently. It's all buried in the minutia of the OCC website. You have to kind of dig it out there a little bit. So there are these little thresholds that are lurking around there that you may not be aware of. But it's a good question overall, P&L man. I like this one from BTS. BTS says, you guys say selling puts, quote, works until it doesn't. What do you mean by that? Is it not a good strategy for newer traders? Well, yes, I do say that all the time here on the show. And it's exactly what it sounds like. It's a strategy that's very attractive, obviously. It's usually a higher probability strategy because people are selling out of the money puts in a lot of names. In equities, those puts have inflated levels of volatility premium compared to the calls. So it's attractive from an overall premium level and also from a probability level. So when you first get into it, people get lured to the dark side because they're making consistent, steady money doing it. And what the problem is of course, what happens when you cross that line? As Uncle Mike says, what happens? He never lets his put spreads go in the money. So that's what you have to have a plan for is, what do you do when you cross that line? Uncle Mike, sir, for BTS here, who's concerned about what he should do. He wants to sell puts, not sure what he should do when it goes against him. What would you counsel him, sir?
Well, the first thing, like what Andrew always says, if you're going to sell a put, be prepared to own the stock. So in other words, if you're going to do that, make sure you're not over levered, meaning if you're going to sell a put on a company that's $50 a share and you sell the 50 put, let's say, make sure you have $5,000 in your account to own the stock. If you want to leverage yourself, meaning you want to sell that same put, but you don't want to use all $5,000, then that's where a put spread could come into play. You could sell the 50 put and then maybe buy a 45 put. By doing that, you have to have a line in the sand, meaning as soon as it goes below a certain level, and let's just make the stock $53 a share, just to keep it simple, you got to have a line in the sand. And Just like Bugs Bunny and Yosemite Sam, like I always say, when Bugs Bunny says, I dare you to step across this line, and Yosemite Sam steps across it, if you step across that line enough, you'll end up like Yosemite Sam and falling off the cliff. So either roll it down, don't let it go in the money if you're levered, or be prepared to own the stock if you're unlevered. Those are my 2 rules.
I was just scrolling through the dark minutia of the OCC website while you were talking, see if I could find any threshold or barometer here. They have strikes and everything else here. They don't have, in terms of volume, how much volume we want, position limits. They have all that stuff. I don't see you have to have X amount of contracts per day or per week to be listed as a weekly here. So I'm not seeing that yet, but general, it is volume. More is better, obviously, right? If you want to have a weekly listed on there. As we keep on rolling, listeners, good questions. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to go around the block. Obviously, a lot for all of us to keep our eyes on right now in these crazy, topsy-turvy, tumultuous markets. Where are we hanging out now as we end the show? Everything's in the red now, even the Dow. It was briefly flirting with the green as we kicked off the show, but now the Dow giving up the ghost ever so slightly. That could easily turn again as the day proceeds out there. Let's go out now to the Unklest of Mikes. Mr. Uncle Mike, sir, what are you keeping an eye on until we gather here together on Monday? Oh, no.
He's gathering the mute button.
I got the mute button. I pulled an Andrew on everybody.
You're back in the U.S. You got all your good equipment with you, and you still can't hit the mute button in time, sir. Well done. Well played.
I can't believe it. I'm watching the SPX, the low that we put in on Monday, 42.22. We're still a ways away from that, but I think that's an even number with which to look at because that's where we bottomed out on Monday, where buyers did come in. I think the next low after that we got to look at is 4,000 because it's an even number, and then after that we got to get into the 3,700s because that's where that was the last close of 2020. So watching those levels, seeing where we're at with it, also watching to see if we have any big news events over the weekend. I'm definitely going to be as prepared as I feel I need to be over the weekend to take on any weekend risk, because if all of a sudden Russia and Ukraine don't behave well, then that could be a problem for those put spreads. And my line in the sand might get crossed for me over the weekend, so I need to be prepared for that.
I was going to say, what if we do get down to like that 4,000 level? Is that going to start changing the game for Uncle Mike?
I'm at a stage right now to where I don't have I have minimal gamma on the table, and just with that put spread a couple months out, the gamma doesn't bite me so bad when it goes against me. And because we're negative on the year, I really don't have a lot of deltas on the table right now. So I've always said your risk management 100% of the time needs to come before your market sentiment.
There we go, listeners. Yeah, we all could find out more shocking revelations over the weekend. Speaking of shocking, he's always good for a shocker too, Mr. Rock Lobster, sir. What are you keeping an eye on until we gather here together on Monday, and including over a very fraught weekend, sir?
Well, of course, there is the fraught weekend, but I think the market is accepting that the Fed will raise rates. I think the bond buying will stop. Eventually, high value growth stocks will find some sort of bottom, although a lot of them, like we laugh at Hood, it was, what was it, 75 or 80 bucks? And now it's 11. So if you look around, there's a lot of stocks like that. So I think that's the thing. And also if we could see like some kind of crazy new high for VIX, every time this market looks like it wants to sell off, it just stops, and I think today's another day where, we rallied hard and now we're kind of sitting here in the last 2 hours of the day and the bid for VIX is going away and maybe things just quiet down a bit. So, I think that's what we got.
Unfortunately, we don't got a specific threshold here for the listing of weeklies. I was still digging through. There's a lot of minutia to dig through here. Maybe we'll find it for Monday's show. But yeah, at the end of the day, more volume is better here. Here's a strike interval proposal for weeklies if it has a daily volume greater than 5,000 or between 1,000 and 5,000 or 0 to 2,000. That of course weighs on the strike intervals, but that's not in terms of if a weekly will be listed. So interesting stuff afoot. Lots afoot here on the weekend. You need to stay tuned. And, of course, if you want to learn more from each of these compatriots, where should we go? Let's find out Uncle Mike. If folks want to hit you up, talk about risk management right now, good time to probably do it. Where should they go? What should they do? Also, if they want to follow you, get your follower count up on Twitter, where should they go?
Follow me on Twitter at Mike TOSAW. I literally put up a tweet probably 30 seconds ago. Should I do a webinar on Row? Go ahead and answer that if you would. And if I get enough yeses, I'll do one. And if I get 100 more followers, I will do another webinar on Row if you'd like as well. Whatever you guys need. If you're looking for a financial advisor who has close to 20 years of experience and is not afraid of the option product and often likes it for his clients, if it's appropriate, of course, Mr. Compliance Officer, feel free to reach out to me by following me on Twitter. Check out my website, stcharleswealth.com, and reach out to me.
There you go. Hit him up. I'm pleased to say I'm your first vote, Mr. Uncle Mike. I put a yes in just for fun. Even though I'm not a big Row guy, I thought I'd just play with the numbers a little bit. Threw a yes in. So right now you're at 100% yes. Uncle Mike.
Love it.
So go for it. stcharleswealth.com is the place to go. At Mike TOSAW on Twitter to vote in this poll and everything else. And Mr. Rock Lobster, if they want to see all your Twitter trolling for themselves, where should they go? What should they do?
Go to optionpit.com, Capital Gains, Vol Trade Club. I'm also helping Mark with the Big Money Flow, which has been a crazy good product. Looking at that unusual activity. No surprise there. There's a reason why we do it, because it works. That's why it's good to see what that big money's doing. You might not agree with it, but it's good to see where they're spending their money. All right, that's where you optionpit.com and call Ted. You can get 10% off any product if you just say I listened to the option block. So 888-TRADE-01, call Ted. 10% off anything if you said you listen to the option block.
There you go.
Andrew said so.
Call Ted. Yep, doesn't matter what you call him. You can call him whatever you want, as long as you call him over there in the land of the pit, optionpit.com. We got to get on out of here, listeners, but don't worry if you're listening live in the Secret Club. We'll pump some fun stuff in there. We'll be back in exactly 25 minutes now with Todd Colvin to break down the world of rates and everything else. Probably got a feeling some nat gas may make it onto the show this week and a whole bunch of other stuff, small caps, equity vol, you name it. If you have products you want us to discuss, now's the time. Get those suggestions in. Back again, I said, in TWIFO a little bit later today. Tomorrow, volatility views, noon Central, 1 p.m. Eastern. Man, there's a lot of vol to view this week. And then right after that, 2 p.m. Central, 3 p.m. Eastern for your Secret Club folks for Options Oddities. Then back again on Monday for the Option Block. Stay safe, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.